Welcome back to Pete Invests, your channel for uncovering the financial strategies consistently used by the absolute wealthiest individuals today. Today, we explore a highly misunderstood topic, revealing exactly how the rich consistently use strategic debt to get significantly richer. Most everyday, hard-working people are widely taught by traditional society to firmly believe that all forms of debt are entirely bad. They falsely believe debt is incredibly dangerous, a massive financial burden, and something that should be avoided at all possible costs. But the absolute wealthiest and most financially educated individuals in the world view the fundamental concept of debt entirely differently. Entirely. To them, debt is not a burden, but an incredibly powerful financial tool relied upon for accelerating their immense wealth consistently. The fundamental secret to this incredible strategy clearly lies in deeply understanding the massive, crucial difference between bad and good debt. Terribly bad debt essentially means blindly borrowing incredibly expensive money to buy everyday consumer things that rapidly lose underlying value forever. This clearly includes liabilities like luxury designer clothes, brand new cars, or rapidly depreciating electronics offering absolutely no financial return whatsoever. Incredibly good debt involves strategically borrowing relatively cheap money to intelligently purchase strong, reliable foundational assets, generating highly lucrative passive income. Let us take a crucial moment to dive deep into the famous and utterly powerful wealth-building strategy called Buy, Borrow, Die. It certainly sounds highly extreme and somewhat intimidating at first glance, but it is a perfectly legal and entirely proven method. This completely transparent strategy is utilized relentlessly by the elite class to systematically build lasting, massive generational wealth for their families. First, highly educated, extraordinarily wealthy investors aggressively acquire highly appreciating, powerful foundational financial assets that consistently grow over long periods perfectly. These critical foundational investments could easily be lucrative commercial real estate properties, diversified index funds, or heavily successful cash-flowing private businesses. Instead of foolishly selling these incredibly valuable assets when they desperately need liquid cash, they simply patiently and quietly choose wait. Selling assets unnecessarily automatically triggers massive, wealth-destroying capital gains taxes, which is exactly what everyday amateur investors mistakenly do during needs. When these highly intelligent, remarkably wealthy investors finally need fast, liquid cash to fund their lifestyle, they simply strategically borrow money. They consistently borrow heavily against the incredibly high, proven market value of their existing assets without ever permanently surrendering their ownership. Massive global banking institutions are absolutely thrilled to eagerly offer them incredibly low-interest, massive portfolio loans without any hesitation whatsoever today. The lending banks feel securely safe because the entire substantial loan is completely safely and entirely secured by these valuable assets. Here is the undeniably magical and deeply misunderstood part of this entire brilliant financial strategy that clearly separates the rich class. Strictly borrowed bank money is simply and legally not ever classified as ordinary taxable income by the Internal Revenue Service permanently. Because it is legally not considered standard taxable income in any capacity whatsoever, the wealthy completely avoid paying financially crippling taxes. They highly strategically use this completely untaxed, heavily borrowed money to comfortably fund their luxurious lifestyles without selling a single asset. Alternatively, they strictly use these incredibly cheap, accessible funds to buy significantly more powerful, highly lucrative income-producing foundational assets for portfolios. As their newly acquired foundational assets continue to significantly, rapidly grow in massive market value over passing years, their wealth expands. Their overall comprehensive financial net worth continues to expand at an incredibly rapid, spectacular, astonishing pace that most absolutely cannot comprehend. Meanwhile, the exact original, highly valuable foundational assets they smartly borrowed heavily against are also still steadily growing and compounding immensely. The steady, reliable annual financial growth rate of their incredibly powerful underlying assets almost always dramatically outpaces the low negotiated interest. For a highly practical, incredibly easy to understand financial example, if a strong underlying asset reliably grows at 8%, the loan costs. The intelligent investor undeniably wins by making a completely effortless, passive 5% profit on extra, incredibly cheap money borrowed strictly. Both residential and commercial, highly lucrative real estate investing is perhaps the most common, accessible way everyday investors can start leveraging. When you successfully secure a standard long-term residential or commercial mortgage, you are brilliantly using the massive bank's completely enormous money. You literally use the bank's deep pockets to completely, securely control a highly valuable, tangible, fundamentally strong physical property in neighborhoods. You typically only have to forcefully put down a relatively small 20% cash deposit, successfully keeping 100% appreciation. This incredibly powerful, fundamentally transformative financial concept is formally called strategic leverage, and it is the absolute cornerstone of monumental wealth. Leverage dramatically amplifies your personal financial returns and heavily accelerates your personal path toward achieving ultimate, true long-term financial freedom forever. As the physical property value consistently, reliably goes up over the ensuing years, your relatively small initial cash investment effectively multiplies. Furthermore, your highly reliable, carefully screened, consistent tenants are actually fundamentally paying down your expensive, massive mortgage loan balance every month. The truly wealthy, highly educated investors completely understand that severe economic inflation is actually a fantastic, incredible financial ally for borrowers. Over a significantly long period of time, heavy, compounding inflation consistently makes regular, everyday money worth much less due to decreasing. This ultimately means the true, actual economic cost of your deeply outstanding fixed-rate debt slowly, naturally, and predictably decreases as passing. You are essentially paying back the massive lending bank with much cheaper future depreciated dollars that have significantly lower purchasing power. Strategic, heavily calculated corporate business debt is another incredibly powerful, deeply utilized financial avenue that highly successful, globally recognized companies execute. If a remarkably smart, well-run corporate company heavily borrows at a historically low 4% to aggressively fund massive yielding projects, the deeply loyal financial shareholders undeniably win big, and the heavy, substantial interest reliably paid out on these massive loans deductions. But what actually, legally, and specifically happens when the extremely wealthy individual ultimately passes away, leaving their massive financial empire behind? The absolutely crucial, deeply fascinating final step of this highly sophisticated financial strategy is the die portion, strictly involving legal loopholes. When they inevitably pass away, their massive, diverse, incredibly valuable portfolio of strong assets is safely passed down to fortunate heirs. This massive wealth transfer heavily happens with what is formally called a massive stepped-up basis, completely resetting the comprehensive asset value. Any huge, financially crippling capital gains taxes that would have legally been firmly owed on the massive historical lifetime growth disappear. The The highly wealthy heirs can then quickly, efficiently sell a carefully selected portion of these newly stepped-up, incredibly valuable assets tax-free. They smartly use that massive influx of completely tax-free liquid cash to completely pay off outstanding bank loans, permanently keeping fortunes. Now, it is absolutely crucial to deeply understand that actively using strategic, heavily leveraged debt strictly requires immense, unshakable financial discipline. Powerful, calculated leverage works remarkably beautifully when underlying asset prices continuously rise, but it can be disastrously devastating during unexpected crashes. If underlying asset values suddenly plummet, the terrified lending bank might aggressively issue a demanding margin call, fiercely demanding immediate repayment. To permanently protect their massive financial fortunes, the extremely wealthy practically never borrow the absolute maximum risky amount that banks lend. They strictly maintain incredibly safe loan-to-value ratios, heavily ensuring they always possess a massive financial buffer firmly standing against severe downturns. The absolute biggest, most highly important fundamental key takeaway for you to deeply understand today is to permanently shift strategic mindsets. You absolutely must stop borrowing incredibly expensive money to mindlessly buy terrible, rapidly depreciating consumer liabilities that completely ruin your future. Instead, firmly start heavily focusing your highly valuable time on deliberately acquiring extremely high-quality, powerful assets that reliably put tangible money. The strict, complicated rules of global foundational money are specifically written to heavily favor those brilliant individuals who deeply understand debt. Please always firmly remember, heavily utilizing strategic, leveraged debt is essentially a highly dangerous double-edged sword that can build or destroy. Here, strictly at the popular Pete Invests channel, we are deeply dedicated to heavily breaking down massive concepts into steps. If you truly, honestly found this comprehensive breakdown of highly guarded, wealthy debt strategies incredibly valuable today, please heavily smash likes. We heavily release brand new, deeply transformative finance explanation videos every single week to strongly help you perfectly navigate personal wealth. Please definitely check out the highly specific, deeply recommended video literally popping up on your personal screen right now to learn. As always, I personally want to genuinely say a massive, truly heartfelt thank you so incredibly much for consistently taking time. Before you go, remember to like the video, subscribe strictly to the channel, and firmly turn on the notification bell today.